Welcome back. Well, picking up a little bit of pace for the Bank Nifty, so up around 0.3% currently for the Bank Nifty. Do watch out for a couple of stocks. Nestle India is your top gainer, however, on the Nifty at this point, up around 2%. Wipro ahead of its numbers this week is up around 1.6%. And SBI is doing well as well. So State Bank of India is gaining on the news of a possible QIP. So that stock is up around 1.5%. But let's shift focus to the metals making headlines on account of tariffs and increased safe haven buying. As investors continue flocking towards silver, what remains to be seen is whether the yellow metal prices are poised for consolidation. And if not, then how soon can the yellow metal scale those levels of around 4,000? Hear out Francisco Blanch of BofA Global Research as he gives us a rationale on the metal pricing and triggers going forward.
We have been pretty bullish on gold for some time now. And earlier this year, as tensions rose and we saw gold breaking, just getting very close to $3,500 an ounce, we started advising people that it was time to diversify away from gold and look at other metals. The metals that we preferred in the precious space are silver and, of course, platinum. We don't like palladium as much. I mean, of course, it will rise in sympathy with the other metals, but we think platinum will outperform palladium throughout the next few months. And there's a number of reasons for that. But our favorite metals in the precious space right now, particularly going to the second half of the year, remain silver and platinum. And there is an industrial element to this, but also remember there's a big jewelry element too. When this thing started, when platinum started rising, platinum was trading at a third of the price of gold. And gold jewelry is down 20% year on year around the world. So even a small rotation away from gold jewelry, 1% gold jewelry rotation into platinum doubles the platinum deficit. Because platinum is such a small market compared to gold, same as silver. So that small trickling out effect is starting to bid up other precious. So we remain constructive. We think silver will go to $40 per ounce, and we had a 1,400 target for platinum, but it keeps rising. So maybe we'll keeps going higher.
I clearly, get the sense that you're quite bullish on platinum and, the other couple of precious metals. But what about gold? Has it run its course?
Well, so gold is a little more challenging, right? Because remember, one thing about gold is that it needs investor support. I told you jewelry demand is down a lot. And we need to see more investor money coming in. And the investor money can come either from the private sector or from the public sector. Public sector money is, of course, central banks. Central banks have been the ones driving the rally. If you go back to 2017, 2018, we didn't see central banks buying 1,000, 1,100, 1,200 tons of gold every year. We saw them buying 300, 400, 500 tons every year. So we've seen more than doubling, tripling in some cases, central bank gold purchases. And that continues. But in order for gold prices to rally beyond 3,500 and into 4,000, you need a lot more investor buying. And what drives investors into gold? Basically, it's uncertainty, right? Remember, one thing about gold that's very important to realize is that it's already a very big market. I mean, this is not some obscure cryptocurrency or anything like that. And this is a market that's over $20 trillion, right? The U.S. Treasury market is $28 trillion in the hands of the public, and just about $20 trillion in the hands of the U.S. public, with the remaining being in the hands of foreigners. So gold and U.S. Treasuries are really getting very close in size. And in fact, if you look at central bank reserves, gold has overtaken the euro already as a central bank asset. So we remain bullish. We have a $4,000 target over the next 12 months on gold, but we think you need to see continued shocks. And as you probably have seen with this news on tariffs, renewed, you mentioned it earlier in your show, this is what's driving the uncertainty and pushing investors to accumulate more yellow metal in our view.
Francisco, also coming on copper then, and it has been a very, very volatile year for this one metal. All-time highs in the U.S. markets, not so much on LME and Shanghai, but the kind of disparity in prices that we're looking at, even premiums that the U.S. seems to be commanding right now, that 1st of August is not too far away. What are you reading into on what really could conspire, one? And second, what is your sense now on the prices, especially when the 3 exchanges really seem to be doing very, very differently in that?
This copper has been a fascinating story. I mean, last week we saw massive movements in the copper price. We were bullish U.S. copper and advising people to be long U.S. copper because obviously that's where the pressure point was going to come. But I don't think anyone expected 50%. I mean, that was very, very high. The market ripped on the news, and as the 50% tariff became confirmed, copper kept on rallying. So U.S. copper. Of course, LME copper not so much, and so on, and Shanghai not so much. But the U.S., right, for quite a long time, we've seen copper flowing into America. We've also seen gold flowing into America, by the way. I mean, it's been a common pattern because we've seen 50% tariffs applied on aluminum and on steel. So people have been rushing to bring stuff into the U.S. Commodities have been effectively at the center of some of that front loading that I was discussing earlier. And I think with the case with copper, to me is kind of fascinating because the real issue in the copper market is that there is a shortage of copper ores. And the differential between the copper ore price and the price of refined copper, once you've processed the ore and turned it into that refined copper, is very very minimal, right? I mean,
Correct.
there is almost no value in refining that copper. So the tariffs are effectively going to encourage potentially more refining of copper in the U.S., but I don't see refineries being built on these tariffs.
So Francisco, what's your sense then on prices going forward, and do you see this disparity continue in case of copper?
Well, the disparity continues because the tariff is there. But I think in terms of demand, right, we told people like in the short run, prices will spike. But if you look out into the next few months, there's going to be demand destruction because suddenly if you're an industrial in the U.S., you got to pay 50% more for that copper, right? And you're becoming less competitive. That's the challenge with tariffs. If you're a producer of sophisticated aluminum cast parts, for instance, your input cost went up 50%. So you're less competitive in the global market.
Oh, absolutely.
It's the same thing. So I think ultimately we'll see demand destruction and eventually that will feed into somewhat lower prices, particularly in the LME and in China depends a little more on what the dynamics of the Chinese economy are. But I think the LME price will struggle to keep going higher. The U.S. price, of course, will remain high.
All right, so that's about the commodities action, but let's tell you something that we're very thrilled to share. The next chapter in CNBC-TV18's journey, the launch of CNBC-TV18 Prime, which is our premium subscription-based platform designed to deliver world-class insights and in-depth global coverage to India's decision makers. To mark this milestone, we're hosting a special evening of dialogue and connection with a curated gathering of leaders and change makers. With the likes of Bain & Company's Manny Makeda, Delphi Capital Management's Robert, and market veteran Ramdev Agarwal, HDFC Life's Dheeraj Reli, former Foreign Minister of Singapore George Yeo, and former Foreign Secretary Shyam Saran, along with Brookfield's Ankur Gupta, will be a part of this landmark celebration. Join us on CNBC TV 18, 5 p.m. onwards.